Alright, I've recorded this video too many times because I'm a bad YouTuber, guys. But basically, I'm just gonna go at it. So, when it comes to analyzing stocks to try to find entries, there's not gonna be one size fits all. You have to understand the stock's story as a whole, what it respects, how it trades, how volatile it is, how event driven it is, because all these things can disrespect your theories on what usually happens, or like what is usually support or resistance, or different setups like breakouts, whether you respect those or not. So every stock you do try to find entries on, you do need to know a little bit of their history. But yeah, that's what I wanted to say before I start going into a couple stocks. The first type of setup I can think of, and these are my favorite, they don't really appear often, but this is when a company IPOs. Usually most IPOs are going to look like this, okay? Most IPOs are going to be massive, right? And then reality sits in and it tries to find fair value, right? So I'm just going to go back on the weekly just so we don't have to do a lot of scrolling. But my favorite setup I like to play is when a stock starts to break above its IPO after a decent amount of time, and usually you could check the P&E as well. The company is doing a lot better than they were at IPO, and you usually do want to buy it and play this. So Hood is something that I was actually invested in at under $30 because I did want to play this breakout above IPO. And similarly, it's not the same exact setup, but we did end up playing the same setup on SoFi, where you have IPO price, you have all the manipulation that happens after IPO, and then it finds true price, and then it's going to slowly try to find its way back up, right? So whenever it broke above IPO price here again, it's a good time to play it. You got another entrance here, and then you could have played it. And then I'll just analyze this right now. Let me get rid of the EMAs. Actually, the 150 sometimes is nice as support. But essentially, we have some horizontal resistance forming here. So we have a nice base for the stock forming. And the main thing I do is I find bases of stocks, and then when they start to break out pretty significantly, I start to play them. So something like this is I'll start to watch as soon as it breaks above $20, then I know. And usually I think what will happen is it will grind down here for a while and bring the 55 moving average lower. And once we break above the 55, things will really start to get going. That kind of leads into another type of entry or confluence or scan, you can say, is I'm usually long stocks above the 55 moving average on the daily, and if it's below, I'm usually out unless I have a very long or I own stock. Once again, it does always depend on every position, but we're trying to generalize right now. Okay, what's another one? Rocket Labs, we kind of played the same thing. This is kind of a little bit more dramatic, but we'll zoom in right here. Same exact thing, guys. Stock IPOs has the shenanigans, right? And then it crumbles, finds fair value, and then it starts to break back out. Personally, I wasn't in this at $10. Unfortunately, I didn't know much about Rocket Labs at that point, but I saw that we had broken up about above IPO price, and when this came back down and started to break out again right here, we played long-term leaps, 35, 40, and then we kept rolling them up all the way till Rocket Labs hit $100. So usually what we're trying to do is catch expansion just like that. So sometimes if you didn't catch the IPO breakout, you could just find a regular breakout, right? And then just play it. So what's another stock? We'll go NVIDIA. I kind of already laid out like bases, right? Okay, so we have a base formed here, and then we're breaking out. So we're gonna go ahead and play that. What happens right here? Another base starts to form, and then you could play that breakout. Another base starts to form. You could play the breakout, and then another base starts to form. You could play the breakout. Let's go on the daily, maybe it'll look cleaner. So you can really see some relationships maybe. So we broke out above here, right? And then we continue, retest, continue. So what you're looking for usually is for resistance to flip into support, and we see that happens here. This is resistance. We get above it here, but we get knocked back below. Resistance, resistance. This level isn't quite an exact level, but it just goes to show you that these things aren't 100% tied to, oh, I put my line here, it gotta respect it. Like, no, you're just trying to visualize what the base is to the best of your ability. So that's what I'd like for you guys to use the lines for, not line is not law. But okay, let's continue. But yeah, you can see we break out, and this resistance then becomes support right here. And then that's what we hope to happen when we've broken out. We'll probably maybe hit this all-time high as resistance, come down to about anywhere from 208 to 214, just like this area where resistance, we rejected here once, we rejected here once, we rejected here once. So we know that something's happening at this level, right? So that's going to be our level of interest as we go forward. And that's where I would be a buyer of NVIDIA if, once again, there's nothing wrong with the macro and the fundamentals of the company. Because, once again, if that changes, you can't be playing this breakout theory because the company's not doing well internally. So, Oracle, let's see if we see any breakouts. Or usually happens in expansion phases, but that's what we're looking for, is stocks to be in expansion phases. Well, that's our earnings gap. I just don't really see it. There's not too many clean breakouts to play. Let's go to McDonald's. Well, what am I looking for on McDonald's? Okay, I guess we could look at Target, right? You've made some support here. Bounced off this level quite a few times, and then this was your one area of rejection, I would say. So you mark it off, and obviously, like, when you make like 3 points, that's enough to call it a base, in my opinion. Once again, there's no exact science to this, guys, but yeah, this is actually a regular schmegular breakout. So you just throw it on here, shebang, over the 200, nice, happy days. Over the 55, nice, happy days. Breakout, happy days. EMA bullish, everything at this point is happy days. So this is where I'd be looking at buying, right? But let's be forward looking, and let me show you a couple forward looking breakouts that we actually played. So the whole private credit sector, we saw this on BX. We had some horizontal resistance and a wedge forming. So as soon as we broke out above, we took calls. Easy money. This is like super event driven, so I'm not gonna focus on it. Futu. This is a Chinese brokerage. They're a company that owns a Chinese trading brokerage company. But okay, looks like we have a base being formed here. Perhaps be looking for this breakout. Try to fill the gap. All right. TSM, Intel. Let's look at Intel. Oh, Intel, we've played this beautifully. So we have, I actually do remember playing this when we broke out over here. We took longs, and then we just rode them. I actually ended up getting out before earnings, but I do remember catching this ride out because we had broken out right here. So usually a breakout on some good news is what really helps out. So Snow I played recently. I bought leaps in, but this is nice horizontal resistance right here. Breakout, So as soon as it starts to break out, we bought calls around $300 and we bought 330 calls. It's at 330 right now. We played JPM. I forgot what setup I took there. Yeah, I'm pretty sure I took this breakout. So I didn't ride it all the way. I took out at 330, but we had some horizontal resistance here. Go ahead and break out, and we're playing it. So if you guys are in the Discord server, you guys will know all of these calls that I'm referring to, hopefully. So if you guys are also in my Discord server, you guys know that I took plays on Walmart and McDonald's, and obviously there's no breakout occurring there, and same thing on Uber, right? So for something like this, I realized, okay, one is Walmart under the 200 daily moving average, right? Not too often. We'll just continue going back. Looks like a one-off event, climbs back up. Looks like earnings, one-off event, and then eventually you climb back up. You can just look on the weekly, and on the weekly it seems to have very well respected and never gone below the 200 on the weekly, and during this uptrend it's been respecting the 55. And basically the theory is simple. Like Walmart it's a pretty defensive stock. It's down because of earnings that weren't too great last quarter. They have earnings coming up in a couple days, and I think that Walmart is a good buy for the long term. I bought 2028 January calls, so a little more than a year, right? So by then, I do believe we'll be over $120, or when earnings happens, if it's a nice beat and guidance is the right way, we'll be breaking out of this. But obviously, I played this based off of value. And secondly, I looked at the RSI. This was more of an RSI play but I used the RSI to play this a lot more, because one thing that you notice is, okay, as you're falling down, you're not getting much weaker. You're as strong right here as you were right here. And you're stronger, look, you're stronger at 116 here than you were at 116 right here, right? So that means there is a decent amount of buying pressure. Buyers are here. They are present. They're showing themselves. And secondly, like we don't have too much pressure on these lows. And once again, I just know that a company like Walmart, it would have to be something absolutely catastrophic to set it off this trajectory, right? So what you're trying to do is, whenever it pops down to value, it's just as simple as buying it up and waiting for the long term. So don't overcomplicate it. That's what I did here. And look, we're breaking above the 55 moving average. If we get above the 200, it'll be happy days. McDonald's is the same situation. How often have you seen McDonald's break the 200? What is really going to throw? Are people going to stop eating McDonald's? No. McDonald's can probably charge whatever prices they want. People they'll get mad a little bit. Will they stop eating it? No. So what's the issue here, guys? Like, tell me. Why are we scared to buy McDonald's? Oh, it could be fertilizer issue. That's the only thing I could think of risk-wise, because of what's happening in the Strait of Hormuz and food prices. But the thing is, it's all like the consumer's gonna eat all the costs. It's not like McDonald's gonna, oh dang it, my potatoes cost more, so my margins, I guess we'll make less. No, bro, the fries are gonna cost $3 more, or whatever the hell, so McDonald's is fine. So I see this as value. It's not in free fall, in my opinion. But I think, once again, my term on this is I bought till 2028, right? So something really would have to be bad. And the risk to reward it's there. If you start to put pressure, make new lows, and break down, then I'm maybe out. And what was the cost for that trade? You're going to risk maybe 2 to 3%, 5% for a minimum of 10 to 15% to the upside to hit new all-time highs. So for me, something like that is worth it. You can get out of the wave pretty quickly when you're in value. So Microsoft, we got out of Microsoft today. Microsoft was once again another, in my opinion, value buys. So I looked at this chart and I was like, okay, how often is Microsoft under the 200 moving average? And yes, there is a little bit of software scare, but if you're in my Discord, you know that I wasn't really scared about software. I knew that it was a good buying opportunity for the IGV. But basically, I saw this. We had a nice double bottom. We respected the 200 daily moving average. Why would I not be a buyer at these levels? This confirmed when we came back down here and couldn't break down below. I was buying up leaps. And what happened? We went up, and on great earnings, we made shit tons of money. I got out because basically when stocks are on their downtrend, when stocks are usually trending, I like to use the fast moving averages because that's what I noticed. They tend to bounce off, and that usually gives me a good determination of the trend of the stock. Because if you get rid of it, sometimes you don't know if that new high or low is enough to continue the trend or has it peaked. Essentially, if you're just making random lines, you can connect 2 points at any single slope, right? So you're just using moving averages instead of trend lines because trend lines are super biased. Okay, Nebius. Once you break below both the EMAs, you can tell that a trend is probably coming to an end, right? A nice little base forming and a breakout. Great, guys. Shopify. Let's see what's happening here. Nice little breakout happening. We've held. This is actually something of interest you can play as long as it holds 142. Maybe I'd like this ideally to go ahead and touch that. And then you could either try to enter here and try to play the top of the range again, but that is a little bit risky. I'd wait for it to try to make a new breakout after it stays in this range for a little bit, and then you could try to play it up towards 180. Google? Let's take a look. Google. It's kind of just like the same thing. I mean, they all kind of move like in the direction of the market. So the 200 gets respected, you just buy it up, right? So there's just, it's not rocket science. But when I said some stocks are weird, like at the beginning of this video, Tesla is like one of those stocks, right? Because it's super event driven. You could just look at the PE, right? I'm blanking on the word. Speculative. Super speculative. So sometimes you can play the breakouts when you do see them, but in all honesty, I try to stay away from stocks like Tesla. I do own Tesla stock, but it's a buy and hold, wait 10 years, see where it's at type situation. You don't trade Tesla, you invest in Tesla. Same thing with many other stocks that are event driven a lot of the time. Visa. So Visa, we tried to play these calls. As soon as it breaks this trend, so you can see it respects and it bounces, right? So if it breaks below here, it bounces. When you start breaking below, okay, look, we didn't make a new high, right? And this is, I hate that I'm going back to candle structure, but it sometimes that is what it takes. You just see, okay, we've failed to make a new high, right? So the buyers aren't here as they were here. So secondly, you see that RSI is falling. So you're trying to push higher while strength is getting lower. You break down below here. So this long is invalid now. What you would want to see is RSI to stay elevated and for you to just continue grinding up. But today it was just not a great day in the market. So a lot of setups got taken out. Uber is something I'm in, long-term play, decent value. Let's see if the IPO breakout rule applies, right? Because I actually did not play Uber IPO. So you IPO, you have a little shenanigans, you come back down. So we know what happened in 2020, right? I'll say, like, this is the base, right? It's formed, it breaks up. Honestly, it didn't even clear IPO highs right here. So, like, technically, we're good. My rule still applies. When we break above right here on IPO and you get some follow through, that's when you get a little bit of juice. How much juice? Let's see. 42 to an average of 60. That's a good 50%, right? Like, not bad. You'd be hopefully trimming on the way up. And then you guys know what happens in the bear market of those last couple of years. So once again, it's a lot of stocks that are still correlated to the general market, whether you like it or not. So when the general market recovers, your stocks recover. They all set up in the same exact way. So I guess we'll look at the general market and see, okay, well, what are we doing, right? General market does not really do breakouts. It's a grind because breakouts usually happen on buying pressure that wasn't there before, right? And it's usually on some sort of news or catalyst, but new buyers are entering something. In the general market, you don't really see this happen a lot because there's always a pretty consistent, amount of buyers and sellers that show up every single day. Yes, some days have more volume than others, but hopefully you guys are understanding the point I'm trying to get across. I'm just not going to argue with you guys. I don't know what other stocks we can look at. To be honest, that's all I do. Like, all I do is follow. Like, when we break out, I follow the trend. If it breaks below both my EMAs, I'm outie. It's as simple as that. Right, a couple things I forgot to tell you guys. I kind of also wanted to teach you guys how to read the MACD. It's pretty simple stuff, once again, but I think a lot of you guys don't know what I use, so I guess might as well just show you guys why and how I use MACD. Let's just flip to something. AMD, wait. That's a decent base form in here. Reminds me of NVIDIA from back in the day when we had that parabolic move. And then... Okay, let's take a look at... Okay, I guess you're starting to break out on Dell. I'm interested. These kinds of moves are kind of crazy. Look, breakout, I'm in. And breakout, I'm in. Breakout, I'm in. Pre-earnings breakout. And then earnings pop. I'm in DRAM, but I already went over that DRAM setup. Okay, you know what? I'm so tired, guys. I'm genuinely... What time is it? It's 2:49 a.m. Why is it 2:49 a.m.? Because I'm a procrastinator. Okay. Come on. MACD, right? How do I use MACD? Why do I use it? Okay, what is MACD? So, in simple terms, you can just think of it's measuring the distance, the gap between the two EMAs, right? And that's, I might not be using the right word here, but it's like momentum, right? So when the gap between two moving averages starts to get closer, even if the stock is moving in a downwards direction, you know that momentum and haste is slowing down. So that's what you see right here. Even though the stock is moving lower, you can see that the histogram is not really making new lows. And that kind of tells you, okay, so pressure is starting, the most hardest part of the move is starting to die down, right? You're in this red, MACD is still red. Both the EMAs are still separated, right? And then once these two EMAs cross, the stock, usually it starts to lift. So Hinge, we actually played this short here, right? So what happened was, okay, Hinge braked out. I didn't play Hinge on this uptrend, unfortunately, but I did see Hinge start to break down below this 9 EMA, right? So as soon as it broke down below this 21, I shorted it. And then I was hoping it would go all the way back down to this level of like 50, 50s and the 60s, but it caught its support at the 55 moving average. And also the histogram peaked. So the most violent part of the sell-off already happened. So as soon as the histogram peaked, I knew that, okay, we're not really challenging the 55. We kind of bounced off of it. The selling pressure just really isn't there anymore. I got out of it. I made like probably like 30% on the trade, not a huge amount, but I mean 30% is pretty good, guys, right? And then once again, I wasn't paying attention to it. What is that wick? But as soon as you had an EMA cross and the MACD flip green, you're kind of chilling. And then the second reason I liked playing this breakdown, because I knew that we were overbought for a little bit and we would have to come down from being that overbought. When we disrespected the 21, I was like, okay, this has good odds of coming down. I mean, what can I say, guys? Currently, I'd say we're bullish on. Why are we bullish on Palantir? Okay, you're above the 55, check. You're above the 200, check. You've broken out, check. It's not the cleanest bases, I agree. But horizontal resistance, I would say this is a breakout, guys. So, yeah, it's something you could play. You could wait. So, same little spiel situation here, right? Right now, we're trending up, right? Whenever it comes, it's gonna come down and test this. All that matters is it gonna bounce and continue going, and then at that point, if that's starting to happen, you can maybe play that as an entry, right? If your time frame is like a couple days, right? Or if you just want to day trade it and just use that as context, you 100% can. There's a lot you can do, but personally, that's what I like to do. As long as it stays above the EMA, I know it's strong, right? It's still got momentum behind it. As soon as it starts cracking below, I'm like, I'm out. I'm outie.